Today in Best in Class, we focus on a value fund that had a standout year in 2009. The Cambiar Opportunity Fund rose more than 40% last year, putting it in the 96th percentile. Brian Barish is the president of Cambiar Investments with more than $5.5 billion in assets under management. He joins us now from Denver, Colorado. Brian, good to have you with us. And I know as I was reading through some of your comments earlier, last year we saw that the markets were really quite cheap, and there was a lot of places that you could put your money. Now you're saying the markets are cheapish and it's time for stock picking. Why do you say it's cheapish? I mean, I know stocks have gone up so much.
Right. Well, if you had a constructive view of the markets in early 2009, and we did, we could see clear signs that a lot of the problems that blew the markets up in 2008 were beginning to heal up. Markets were, many individual stocks, I should say, were 2-3 standard deviations away from quote-unquote normal valuations. Now you find a lot of stocks are moving closer to fair valuations. Some are still rather cheap, but you're not seeing the same type of apocalyptically cheap valuation. So you need to be more selective and try to rotate capital around a bit to identify those opportunities.
Now, I noticed that a lot of your top holdings are energy companies, right? We're talking about BP, Devon, Hess, XTO. Are you still seeing the biggest value there, or have you changed your mind because of their increases?
Well, we've reduced our energy weighting somewhat. We've been very big bulls on energy for several years now. It's not a very controversial thesis. Big growth in industrialization in emerging markets is leading to a lot of supply challenges for oil. However, on the natural gas side, we don't seem to be having supply challenges. In fact, we're having the opposite. We've got too much supply. So we've reduced our positions in North American natural gas facing businesses, reduced our position in Devon. We liquidated some oil field services holdings just because we don't think the outlook is as robustly bullish there. And where we've been finding opportunities has been in various laggard areas.
But Brian, what about those who say, though, that natural gas demand is likely to go up because you've got climate change legislation going through?
I think it will go up over time, but no pun intended, that's a very slow burn catalyst. In the near term, there's just way too much supply and way too much drilling activity, and it's going to take a hard landing, essentially, to get North American E&Ps to slow down their activity.
Okay, and Brian, just quickly, technology consumer stocks is also where you see some good bargains, but those have also actually seen some pretty big or some pretty strong gains within the last 12 months. Where exactly would you pick and choose?
Certainly there's been some big gains, but these are very big and very heterogeneous sectors. In technology, we're seeing a lot of value in semiconductors and semiconductor capital equipment. That's actually been a fairly weak performing area of the market year to date. We've been adding to some positions there. Applied Materials notably looks really interesting right now and has lagged the overall recovery pretty significantly. In the consumer area, it's pretty broad.
Right.
We're finding some hybrid staples type businesses to be very interesting.
Okay, Brian, we'll have to leave it there, but thank you so much, Brian Barish of Cambiar Investments.